important to make sure that you then do have what is called a checklist in terms of making sure that, yes, I'm paying for medical aid. Yes, I'm paying for my retirement retirement fund. Yes, I'm saving for wealth building. Yes, I've got a will in place. Yes, I'm doing my estate planning. But at the same time, I have those income streams that are going to be coming in. So that's what I'm going to be talking about. And I want to jump straight into it because at 12:30, I would like to start having a conversation with S and Salim. All right. So first things first is that you need to have an income, right? So when we talk a little bit about income, we've got to differentiate the different ways in which one can actually derive their income. So at the risk of making this a monologue, I'd like to find out from you guys, what types of incomes do you guys actually have, right? So for instance, your different incomes would be your earned income. So your earned income would be your salary, your remuneration from a job. So please let me know, guys, what types of income that you guys have in the chat box, so we can start seeing how do we help each other in terms of, if you only have a salary, what other income is available to you, right? So as I said, there's earned income. And earned income basically is your salary, your remuneration. So if you remember, we used to speak about the 7R theory of, what was his name? But 7R theory to wealth, right? So the 7R theory gives you 7 different R's of how you make your money, right? So today I want to just reposition them in a different manner and start off by saying there's a thing called your earned income. Then there's what is called profit income. And this is why I say to you guys, I'm bringing somebody like Theo Baloy to come and have a conversation with us about using a business as a wealth creation asset. So basically, if you have a business, basically you are earning a profit, and that becomes your profit income, right? The next income that we're going to speak about is interest and dividend income, right? So again, your interest is where S is going to step in, because S speaks about buying a shares portfolio, and that's where you're going to earn some level of interest. Well, it's actually capital gains plus interest and dividends, depending on how you structure your actual investment portfolio in the stock market. Because remember, buying shares is not always buying shares that are listed Johannesburg Stock Exchange shares. You can buy equity into somebody's company. So for instance, again, I'm going to use a company that we are going to be talking a little bit about today, which is Batu, for instance, right? So because Batu is not a listed company yet, you may be able to, if you entice him well enough, to get into a conversation with a person like Theo, a person like Lekau for Drip, a person like Nicolette for Financial Fitness Bunnies. So you could get into a conversation and say, how do I buy equity into your company? So I have a little bit of money and I want to invest into your business and buy equity. So I'm buying a percentage of your business, right? So you would have shareholders' dividends that you are earning at the end of the year if the business is profitable. Same thing if you are buying listed shares, whether it's from the Johannesburg Stock Exchange, whether you're buying from NASDAQ, whether you're buying from the New York Stock Exchange. Basically, what you are going to be earning is you're going to be earning dividends if the companies that you have invested in are actually paying dividends. So S will also get into a little bit about how do you pick shares that are going to be paying dividends. How do you identify those companies that do pay dividends? All of that information is going to be very important, because if you have a strategy which you want to earn dividends plus appreciation of the share price of the companies that you are investing in, you need to be able to pick the dividend paying companies. And naturally, what we would look at the history of the business and say which businesses naturally or have traditionally or in the past. Of course, past performance is not always an indicator of what's going to happen in the future, but it is one way in which you can look at finding a strategy of investing within your businesses, right? Or within the companies that you are choosing when it comes to the stock market, right? Then the next type of income we're going to look at is capital gains. Again, speaking to buying assets that have a capital gain, right? So I'm going to use property because that's the easiest one to use. So for instance, I was having a conversation the other day with the guys from Central Development, and they were saying they've got a group of investors, right? And what these investors do is that they get invited when we're still talking about planning an estate. So think about the estate that you maybe know or maybe live in, and think about the planning stage. At the planning stage, these guys from the property company will invite their trusted investors, and they will say, we are planning on building an estate here in Marabastad. The estate is going to have 2-bedroom apartments, 1-bedroom apartments, and maybe at the top floor, your studios. And we want to invite you guys to help us in raising the capital to build this estate by buying individual units or buying a block of units. Now, by the time those guys buy, right, and by the time they actually sell to individual investors, there's already what is called a capital gains in terms of the price and the value of the property that is being built. So this is what we mean when we talk about capital gains. We're talking about an asset that has a capital gain, so an appreciation in its value. So that is what you would be earning as an income. It is called capital gains because that is money that you are gaining due to the value of the asset that you are buying appreciating. Do remember that if there's capital gain, there's also capital loss, right? Okay, so the next income that we're going to speak a little bit about is my favorite one because it is ongoing. It is the most passive income you can ever get, and that is royalty. Guys, it is important to earn royalties. The reason why I say this is because I'll give you an example. I was having a conversation just the other day with somebody. I got an email and somebody was like, hey, Nicolette, we actually saw your book, Coco the Money Bunny, and we would like to buy a license of the book so we can teach our children the content that's in the book. That is a royalty. It's my IP, and they're buying a license for the next 5 years to teach what's in my book. So I'm going to get paid for the next 5 years for a book that I wrote this year. So I'm earning an income based on my IP. All of us have an IP. You have an IP about something. So make sure that you are stepping up when it comes to how you're going to be earning your income. Your salary can no longer be the only way in which you're earning income. Okay? It's very important, guys. Another one, for instance, I think 3 years ago, I recorded podcasts with FNB. So if you log into the FNB app, you may find podcasts, money management podcasts with myself and FNB, right? 3 years ago, I got an email 2 months ago that said, hey, Nicolette, we've gone past the usage date that we've agreed on and we've paid you for, but FNB would still like to have these podcasts on their app. How much are you going to charge them for usage? So all of those things are what we call you using your IP, your intellectual property, to be able to earn a certain income. And that's how you're going to earn that income, right? So it's either your face, it's either your voice, it's either your work, it's either your research. It's literally what belongs to you and can only belong. So you are not transferring any type of ownership to somebody else. However, when people want to use it, they've got to pay you to be able to use it. One other thing that South Africans have, I don't know if you guys remember the girl from Ujiwa King. There was a girl who tweeted a tweet and she wrote Ujiwa King, right, on Twitter. And brands wanted to jump on that thing. And I said to her, I remember having this conversation with her, and I said, Mami, it is important for you to make sure that you go and you trademark this. South Africans are some of the most creative people in the world, but we don't trademark the things that we say. So it's important that when you come up with something creative, immediately go to CIPC and trademark it, because you could potentially, I mean, how many of you guys know the story of Bafana Bafana? I think a couple of years ago, there was actually a young man who went and registered the trademark Bafana Bafana. And literally, when he realized that Bafana Bafana is actually a big soccer team in South Africa, he was like, nah, I need to get paid for this. And he came for his money because that is his trademark. He's trademarked Bafana Bafana. However, it's also important to remember that you cannot just trademark ordinary words, guys. So don't even try and trademark Financial Bunny. I already got onto that one. It is trademarked with Nicolette Mashile, so don't even try that. Right. So that's the first step that I would like us to have a conversation about, is really checking whether or not you going into 2022 have more than at least 2 of these income streams. It's going to be very important. The next thing that I want to talk about is a will. I know that we do Wills Week every single year. People still don't go and get their will drafted. Guys, please, in the chat box, explain to me why you don't want wills. I need to get a better understanding why people do not want to get a will done. Because I'm sitting here and I'm like, I am afraid of dying without knowing what is going to happen to my assets. We are stepping up. And the reason why I'm talking to you guys about wills is also because most of you guys who have logged in today, it's people that I have kind of moved with from when we're still all sokolaring and we moved together. And I know that many of you have started businesses. Many of you have rental properties. Many of you have bonds. Some of you have kids. So why are you not doing your will? Why are you not doing your will? Because you are going to be an angry ghost the day you die, because I promise you, you are going to be deep down there and you're going to be watching people misuse your assets. People are going to misuse your money. Yet, because you did not do a will, you are going to be sitting there unable to do anything because you are dead. So it's important, ladies and gentlemen, to do a will, number one. Number two, if you have children, it's important to make sure that you are doing this will too, because what essentially is going to happen is that you're going to sit with kids that mommy did not do a will for, and all of their money essentially now goes in to what we call the Guardians Fund. And the Guardians Fund, by the way, is a government-run initiative. So already just based on that, it means that you already kind of have an idea of how this fund is managed, okay? In fact, so you guys also do this weird thing, right? You guys do this weird thing sometimes that when you bump into me in the club, you want to have conversations about finances, and I'm sitting there and I'm like, I'm just trying to get my mimosa in. I'm just really trying to get my champagne in, but it's fine. Y'all want to have chats about finances. Okay, so let's have a chat about finances. And then there's a lady that says to me the other day, she's like, at altitude, that weekend where altitude was Sodom and Gomorrah, right? She says to me, hey, Nicolette, I want to speak to you about the Guardians Fund because it's bad at the Guardians Fund. It takes 6 months for money to just be able to come out, you know? So it's important that if you are going to pass on without having a will, you die what is called interstate, English, I to be English. And when that happens is that if you have young children and they don't have a guardian, the money goes into a guardian fund, guys. You don't want to find yourself in that situation. So please do a will. Okay, so Batila says, I have a will with the bank, but my fear is the duration banks. I can't see the rest of your message. Please type out the full message. Moncho says, I definitely have a will. Kudos to you. I have a will with the bank. The fear is the duration banks sometimes take to wind up their estate. Should I die when my son is still a minor? Okay, so I think those are the things that you kind of have to have a conversation with the bank. It takes longer to wind up a complicated estate, basically. So if your estate is very straight up and there's nothing complicated about it, you should be able to easily wind up your estate. And there are different things that you can do to make sure that you actually wind up your estate as quickly as possible. The first thing is, even though the banks will hire themselves as your trustees, you can also add an additional person to become a trustee, co-trustees with the bank. This is the person that you trust to help make sure that if the bank is dragging their feet or they are slacking, you can get your person to make sure that they put pressure on the bank to wind up your estate as quickly as possible, right? So that's step number one. Step number two, what you can also essentially do is to make sure that you've got things like a life insurance to settle your bond. You've got things like credit life insurance to settle your debts. Because what happens is that it takes long to wind up estates where people have a lot of debt, for instance, but there's no direct place where money can be found to be able to settle those debts so that they can wind up the estate. So what they generally have to do first is to total what the estate is in terms of liabilities, total the estate in terms of assets, and then figure out, okay, here is Botelo. She's got so many debts, but her estate actually doesn't have enough money to be able for us to pay for some of these things. Where can we go and pull money? So now they've got to sell your assets. Now they've got to do all sorts of things. And that's what makes winding up the estate a little bit difficult and takes long, is simply because of how complicated we leave our own estates. So it takes the bank a long time. And also, if the bank can see, we're not going to even make our executive fees. I mean, they're going to take the executive fees, whether you like it or not, right? But if they can see, this is not worth our time, some of them do slack and they pull and they drag their feet, or they'll pass it on to a junior to wind up your estate. But if your estate is profitable, the bank obviously wants to wind up this thing as quickly as possible because you are a profit to them, right? So leave your estate at all times in a good space so that when they are winding up your estate, it is not a complicated matter, right? It's a very easy thing to do. So I would definitely say there are things that you can do, even with your minors. What you can do is to make sure that you appointed a guardian, so that immediately when they see that you've left some money to your minors, there is a person that they can contact as quickly as possible to say, hey, Nicolette, you have been appointed as the person that is going to be the guardian for these kids. Are you available to do all of those duties? And are you in a sound mind to be able to execute some of these duties? So you can assist in making sure that your estate gets wound up very quickly, but also be aware of the fact that your estate needs to be solvent for it to even matter of what will you actually have created, which is another checklist step that I was going to talk about. Is the will, it goes hand in hand with your estate. Guys, there are death taxes that you're going to pay. There are estate duties that you're going to pay. There are executive fees that you're going to pay. All of these things are important for you to make sure. I know that we don't want to think of life in the manner where we're already planning for our dates. The reality is death is inevitable. It is coming. So it's better to plan for it so that your legacy of being a great money saver, a great investor, a great planner lives on through the people who you are going to leave as beneficiaries of your estate. The only way to get that right is, one, to make sure that you transfer financial education to the people that are your beneficiaries. That is part of your estate planning. And it's important to remember this, because ultimately they are part of your legacy that you'd like to leave behind. It matters not that you have left great assets for your children, a great business for your children, and then the moment you see P and you are out, they come and squander your legacy. So part of your responsibilities of planning great estate planning or great estate management is to make sure that the people who are your beneficiaries are also going to benefit from the education that you have amassed over the years. I mean, for me, it would be a disaster to have children that just don't think the way I think in terms of my finances. But it's important for me to also take on the responsibility I have to ensure that my kids understand what it is when I talk about financial. So I have a big fight with my sisters every single day, because I'm like, how do you not have, if I say to my little sister, let's go to the movies, and she says she doesn't have enough money, I get stressed, because I'm like, why don't you have guilt-free money in your budget when I am the financial bunny and I am your sister? Like, get it together. You know what I mean? So it's all of those things that I think it's important, because she knows she's a beneficiary of my estate. Therefore, I always say to her, if you don't have certain things, you will not qualify to be a beneficiary in my estate. So there are certain things that I have made sure that I put into my will. There are things that I've said in my will that if people don't have this, they cannot be part of my damn will. Like, you can't. If you do not have a good credit score, you are not going to qualify for being a beneficiary of my estate. Okay? At the time when I die, your credit score needs to be top notch and it needs to be in order, or else I can go back on my estate, because you are going to mess up my vibe and all of my efforts and all of the work that I have done to make sure that I leave you profitable assets. Like, so credit score is a big one for me. By the time I die, they need to actually have savings. If you don't have an inch of savings, you don't qualify for my estate. These are, for me, simple things that if you want to be part of the world that I'm building, these are some of the things. School, you gotta have graduated. So for me, unless you are my child, but if you are not my child, my sisters have to have graduated. They have to have a degree if they want to be part of my estate. So it's all of these things that you can literally dictate from underground through your will to whoever is going to benefit from your estate. And it's important to do that will, guys. So do get somebody who can do the will for you. Right. The next thing on your checklist that you need to make sure that you have are your insurances, right? Your long-term insurances, which is your life insurance, comprehensive life insurance. Make sure that you've got your funeral cover that's going to pay within 48 hours or 24 hours. You have your income protector if you are in employment, because once you lose your job, all of these things need to happen. Executive fees, guys, remember executive fees are regulated fees, SPA. So you can't really run away from executive fees. They're going to get paid because somebody needs to. It's like transfer fees when you're buying a property, So you've got to pay executive fees, whether you like it or not. But the beauty is that they can only go up to 3.5% of your total estate. So they can't go above that. I think it's 3.5% plus VAT, so they can't go above that. So you can again control this by negotiating. If you go to a law firm, I think you can negotiate how much executive fees are. They will look at your current state or estate, and they will either agree to a lowered executive fee, or they will just say, now you're playing with us because your estate is really not worth it. So there's really no executive fees that are going to go below 3.5. So again, it's about where are you right now, right? So insurances that you need to have, make sure your life insurance is a comprehensive life insurance. You don't want people sitting there waiting to get the funeral cover money to get paid out because they're still trying to figure out if you are really dead or not, right? Also, please don't be over-insured. You cannot defraud the system, guys. Don't be over-insured. There are too many of us who don't even earn a certain amount of money. Our life is not worth a certain amount. We don't have assets worth that money, but we want 50 million rand life cover. 50 million. 50 million. So it's important that when you are getting a life insurance, get a life insurance that is adequate to make you a replacement or to be a replacement of you. It can't be a replacement of the CEO of Amazon. You are not Jeff Bezos. You cannot be trying to replace Jeff when you pass away. So it's important to make sure that also when you are doing your life insurances, it's a life insurance value that replaces you. And it sounds horrible, I know, but that's the reality of how insurance works. And remember, insurance is insurance. The day you don't pay for insurance is the day you don't have it. The day you don't open an umbrella is the day you don't have an umbrella. So a lot of people, what they do is they pay insurance and then they last on the insurance and then they die during that time. And then insurance doesn't want to pay because you didn't pay your premium. So it's important to remember that insurance is not an investment. There are, however, life insurance policies that have a no claim for a certain amount of years, or you've been with them for a certain amount of years. There may be a cashback bonus that you are getting, but that does not make it an investment. There are, again, also insurances or life insurances that have an investment portion to them, but the entire thing is not actually an investment. It may have that a certain portion of your premiums are being invested on your behalf, and you may get a return on that, but it's not an investment. The day you don't have it or don't pay for it, that's when you don't have that cover. So that's also important, right? Income protection also needs to be part of it if you are employed. Disability needs to be part of it, because none of us know when something may happen that may cause a disability, whether it is temporary disability or permanent disability, right? Retrenchment cover, it's not easily available with most of the policies, but please, 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 please look at your insurance policies. Yes, you can relook your insurance policies. You can review insurance policies. You literally can do whatever you want when it comes to your financial products. They are your products. You're the one paying for them every single month. Therefore, no one is going to tell you what to do with your policies or what you don't do with your policies. So that's really important. I'm going to quickly rush through the last 2 points that I want to speak about. Then we can come back because I want to then bring in Salem and S to come back in, right? Remember medical aid also, you've got to think about medical aid or any type of medical insurance, because we also don't know when we get sick. The other insurance is credit life insurance. Please get credit life insurances for all of your debts, because you don't know when something may happen and you are unable to pay your debt. We need to make sure that debt gets paid off. This again speaks to, remember, estate planning. When I was speaking about the fact that a lot of people, the reason why their estate takes a long time to wind up is because of those types of things where you don't have credit life insurance, you got a bond all of a sudden, you pass away, you have not ceded your bond to, or your life insurance to the bond holder, and all of a sudden we need to find money now to settle a bond. We have to find money to settle your car loan. We have to find money to settle your credit card, and now it's taking long to wind up your estate because estate actually doesn't have enough money. So all of those things are very important to make sure that you are doing, right? The second last thing I want to speak about is retirement. Ladies and gentlemen, I'm going to say this, and I'm going to say this very loud and clear. You do not necessarily need a retirement fund. You need funds in retirement. You don't need to have a retirement fund. You don't need to have a pension fund, a provident fund, a retirement fund, a retirement annuity. You don't have to have those things. They are great products to build your retirement money, but you don't need a retirement fund as a fund. You need money when retirement comes, because retirement is one of the things that is a financial goal that all of us should be working towards, right? All of us should be working towards retirement, because if death does not happen, retirement is coming, and retirement is getting younger and younger and younger. Choice. Legally, retirement in South Africa is still, is it 55 and above, right? But legally, from 55, you can retire, right? You can't change. Okay, so pension fund is when you are an employee. Most people pay towards a pension fund. Then there are retirement funds that you're also going to be contributing to that a business can choose. Then a retirement annuity is a product that you choose on your own, right, to take up. Now, these different retirement funds are all managed and administered by the Retirement Fund Act. So they've got rules and regulations of how they operate. So at certain ages when you can access your money, you can only get 1/3 of your money in cash, and the other 2/3, you've got to use that money to buy an annuity, whether it's a living annuity or a life annuity, right? So you get all of those choices. So you're not stuck with the company's one, because when you leave the company, you can also retire from the retirement fund or the pension fund, or you can take it into a preservation fund and move it and change into a new one, or you can transfer your funds into the new company. So as long as you are working, Busi, in a company and they've got a specific retirement fund that they've already selected, yes, you must do it. But guys, I say, do the retirement calculator and actually see whether or not you are contributing enough towards your retirement. You've got to do the calculator and see if you want to earn a certain amount of money in retirement. It's important to do the retirement calculator to see whether or not you are contributing enough. A lot of us are not contributing even close to enough of how much we want in retirement. Remember, for many of us, especially as Black people, historically, what's going to happen is that some of us may take our bonds into retirement. And all of a sudden, you're in retirement and you're not earning a salary, but your bond still needs to be paid. And you can't activate credit life insurance in retirement because you're not dead, you're not disabled. So you still need to service your bond. Some of us, our children are going to still be with us in retirement because we are making children a little bit later on. So you need money in retirement. That's why I say for some of us, a retirement fund on its own might not be enough. You may just need to have assets that you are also buying. What to do to make sure that you get the salary or the income that you want when you hit your retirement years. We'll come back to this after we've had a conversation with S and Salem. The next thing that I want to speak about, last and not least, is your investment portfolio. Guys, it goes without saying that your money must be grown. Money is not going to grow on its own. It's not a human being. With a human being, you're going to grow either way. Whether you like it or not, you're going to grow. But when you are when you have money, it does not just grow on its own without your effort. You've got to put in effort. You've got to buy assets that are going to generate an income, or they are going to create capital gains.